me ask you something real quick. Have you ever looked at your paycheck, felt proud for about 6 seconds, and then watched it shrink like it's allergic to your bank account? Yeah, same money, different number, gone. And the wild part? Most of that money didn't disappear because you're bad with cash. It vanished because you're playing a game where the rules were never explained to you. Taxes, fees, missed opportunities, money leaking out quietly every single year while you're busy just trying to survive. Most people accept this. They say, that's just how it is, but not you. Because by the end of this video, you'll know how people legally grow money without handing a chunk of it away, and more importantly, how you can start doing the same thing. And no, this isn't about cheating the system. It's about finally understanding it. Before we dive in, comment the one habit you already know is secretly draining your money. And if you want to actually take control of your finances, make sure you're subscribed, because that's exactly what we do here. Now, let's break down the first trap quietly stealing your money, and why it's worse than you think. Listen, I'm going to show you 3 major traps that stop people from growing money tax efficiently and exactly how to fix them. Before another year slips by, you're growing money in the wrong place. Here's the blunt truth. Most people don't lose money because they don't invest. They lose money because they invest in places where taxes eat it alive. Let's make this painfully simple. You invest $5,000. You earn $1,000 in gains. Sounds great, right? Wrong, because when tax time shows up, the government taps you on the shoulder and says, "Nice job, we'll take a slice." Suddenly that $1,000 turns into $750 or $700 or worse. And people celebrate this like it's a win. No, that's money you earned that you don't keep. Now let's zoom out. Say you do this every year, 10 years, 20 years. You're not just paying taxes, you're losing future growth on the taxes you paid. That's the real damage. And yes, that's your money disappearing faster than free donuts in the office break room. Wake up. You'll spend hours trying to save $20 on groceries, but you'll casually lose thousands of dollars because you never learned where to grow your money. That's backwards. You need to prioritize tax-advantaged accounts first. Places where your money can grow without being taxed every year or taxed at all when you use it correctly. This is not advanced. This is step 1. So far, we fixed where your money grows, and that alone can save you thousands of dollars over time. And you thought that was bad? Wait till you see the next trap. You think I'll pay taxes later is a problem. This one messes with people mentally. They hear tax-free or tax-deferred and think, that sounds complicated. I'll deal with it later. No, that mindset is why later never gets better. Here's a simple example. You put away $100 a month. That's $1,200 a year. Over 25 years with growth, that could become serious money. But if that money grows in a taxable environment, you're losing pieces of it every single year. It's like trying to fill a bucket with holes in the bottom. And then people say, I'll just make more money later. Listen to me. Making more money does not fix bad structure. It just makes the mistakes bigger. Stop pretending future you is some financial superhero. Future you has the same habits, just more stress and bigger numbers. If you don't fix the structure now, you're just scaling dysfunction. Set up your money so taxes are minimized before the growth happens. That means understanding which accounts delay taxes, which ones eliminate them, and using them intentionally instead of randomly. You don't need all of them. You need the right order. And if you think taxes are the only thing draining your money, the next one is sneakier. You ignore compounding because it's too slow. This trap destroys patience. People say, $50 a month won't change my life. Correct, but not investing it absolutely will. Let's talk numbers. $50 a month equals $600 a year. $100 a month equals $1,200 a year. Now add time. Over decades with compounding, that's not lunch money, that's freedom money. But here's where taxes sneak back in. If your gains are taxed every year, compounding slows down. If they grow tax-free or tax-deferred, compounding accelerates. Same effort, different outcome. You're not broke because you don't earn enough. You're broke because you don't let time work for you. You quit too early. You get bored. You underestimate boring consistency, and then you act shocked when nothing changes. Automate small amounts into tax-efficient growth vehicles and leave them alone. No drama, no overthinking, no panic. So far, we fixed where your money grows, when it's taxed, and how time multiplies it. But listen, this is where people usually quit mentally. If you really want control over your life, if you're tired of feeling behind, while everyone else looks fine on the outside, this is your moment. Not next year. Not when you earn more. Not when life calms down. Right now, you don't need permission. You don't need perfect conditions. You need to decide that your money is finally going to work for you, not against you. No more waiting. No more excuses. You know your money is growing quietly in the background. $50 a month becomes $600 a year. $100 a month becomes $1,200 a year. $200 a month becomes real leverage. And because you structured it right, more of that money stays yours. Here's the line to remember. You don't need more money. You need more control. And control comes from understanding the rules, not avoiding them. Start small, start smart, start now. Because the goal isn't to avoid taxes forever. The goal is to stop overpaying, out of ignorance. And now, you're not ignorant anymore. You're dangerous, in the best way.